That's so cool. So good morning, everybody. This is Dennis William with the Active Trend Traders for this week's edition of How to Make Money Trading Stocks. Both Michaels are out today. Mike Traeger is taking care of his pup, and Michael Bishop had a business appointment that he was not able to join us today. So I'm going to fly solo, and so we'll move through the slides quickly and take a look at some stocks towards the end to get us set up for next week. I want to remind everybody that all the materials that we present are for training purposes only, and traders should always paper trade any new method prior to the risk of their own personal capital. And then when Michael is with us, this is his disclaimer that's required to do his work in the EU. And I'll just leave it up for a moment. It more or less says a lot of the same things that my disclaimer says, but it's specifically identified for his work there in Switzerland. Okay, let's get going. One of the things that I love to do is I love to teach. I love to basically pass on knowledge that I have developed over the many years that I've been trading stocks and options. And so one of the ways I do that is for the premium members, you can tie into the weekly, what I call it, the midweek market sanity checks, and it's a training session for premium members. This week on November 11th, which is Wednesday, we'll be getting ready for 2016. I'm going to be talking about how we can basically work on some longer term trades and how to set those up, how to position size, how to pyramid into positions. And so that's one you don't want to miss. I want to spend the next sessions through the end of the year just getting us ready for finishing out 2015 strongly, and then secondly, moving into 2016 with an awesome plan. So what's the markets doing today? Big question I have basically is, are we seeing a climax to the last 6 weeks of market upside? Clearly, the S&P is at resistance. The NASDAQ was actually breaking back down through its breakout area. And then the Russell has been hanging in there. So I'm watching the weekly charts for potential reversal candles on the S&P, the NASDAQ 100. The NASDAQ 100 went on up and made a new high for the year. However, its cousin over here, the NASDAQ Composite, which has a lot more stocks in it, has in fact not done that. And although they're both weighted indexes, the one with the largest number of stocks did not in fact go up and make a new high. The Russell is the weakest, but it's holding up pretty well. We'll see if the small caps are going to rally into the end of the year. So outside influence. It was so funny this morning as I was watching the news, and I'm not on television, but I just get the news feeds direct to my computer from like Yahoo Finance, and then also the ones that come through the Thinkorswim platform. And the supposedly strong employment numbers this morning, jobs reports, brought the Fed into focus, with the concern being that, well, the Fed's going to raise rates in December. And that would be kind of interesting if they did raise the rates in December. And the reason I say that is that could be kind of devastating, depending on how, what the interpretation of the Fed's raising is. But there seems like there's a mixed bag of sentiment out there about raising the rates. And then if the Fed does raise rates, it would kind of fly in the face of what the European, what's going on in Europe, what's going on in China with regards to global stimulus. Both of those, areas are trying to stimulate their economy and kind of doing their own adjusted type of QE. Earnings are still, we're going to be still in play for another 2 weeks or so. And then are we going to get our regular Santa Claus rally that typically kicks in around this time of year and then runs through the end of the year? Oftentimes you'll get a slight little pullback toward the midsection of November, or even the end of November, and then you get 2 weeks worth of upside potential after that. We'll see if that kicks in for the markets this go around or not. So here's our chart of the percentage of stocks on the NYSC that are above the 20-day moving average. And as you can see, it came up off the bottom here. This turned out to be a good buy point. Ran up, almost got back up to the 80 level, and then has been falling ever since. However, what's very interesting is that while the number of stocks in the NYSE have in fact been dropping back below their 20-day moving average, on the NASDAQ and the S&P, that has not been the case. They have been maintaining and holding well above that. One of the other charts that I like that you can go over here to, this was last week's chart. We'll get to this week's chart. But you can get here to barchart.com, look under momentum, and call up a chart that shows the percentage of stocks in the NYSE above their 200-day moving average. And so, hey, Michael, how are you? Glad you could join us.
Hey, I'm fine. Happy to join, and sorry for being late.
And so, okay, here is today's chart. And what we saw from last week, we saw a little bit of a spike up, and then it has been rolling over. But it seems to be stabilizing. The Russell's trying to maintain its footing. However, the S&P and the NASDAQ are to the downside right now. So we have a mixed market currently. Will we continue? Is the path of least resistance for us going to look kind of like this? We came up off the bottom here, came up and topped out, dropped back down to a higher low, but now we put in a lower high. And so are we going to get a retracement back down to our reversal area or not? We'll see. We'll see how we wind up. A lot of what's going to be, as we get to the individual index charts, you'll see that we could very well be setting up for a weekly reversal signal, and we'll see how that turns out. So we're going to get over to the charts here shortly. But here's where we sat as of about 9 o'clock this morning. The Dow was up slightly for the year. The S&P has actually given up a little bit. On Wednesday, it was up almost about, a little bit over 2%. NASDAQ 100 still pushing up 10%, almost 11% for the year. The Russell is still negative for the year, but all of these indices are less negative than they were last week. And so there has been some upside momentum going on those. So let's take a look at the charts. And so, while I'm moving over to the charts, I want to thank the folks who have either commented or saw me at a lunch or something like that and told me, and they basically passed on how much they really enjoyed the How to Make Money Trading Stocks webinar, even if they can only watch it by the recorded session. It says that they get a lot of good information and good preparation for the markets for the following week. So here's what we're looking at as of right now. On the daily chart, what we've had in the S&P basically is we had our breakout down here. We broke above the 8-day EMA. Then we get a pullback here, 1, 2, not quite to the 8-day EMA here, but a little flag, breaks up, a stop. And what's interesting is on each one of these pullbacks, we got a few bearish type reversal signals, but that's one of the things about candlestick that is very interesting. Candlesticks tell us where to anticipate a reversal, but they don't tell us how much the magnitude of the potential reversal. And so what we had here was we had a little bit of a hanging man, spinning top, hanging man, and then a downside move, but we went right to the 8 and bounced. Here we get a hanging man, spinning top, bearish engulfing, but it bearish engulfs right down to the 8-day moving average, immediately reverses. And so what we'll be watching this week is, will we get a close back above the 8 or will it close below? If we get a close below the 8-day EMA, it will be the first one we've had now in about 6 weeks. What else is going on here? Well, the momentum indicator, as you can see here, has rolled over and is showing negative divergence as the S&P is pushed up into this resistance zone and turned over. The true strength indicator has in fact also rolled over at the 50 level. As advertised, the 50 level turns out to be a pretty good indication of or a pretty good benchmark on where things can tend to soften up, and if it gets above it and then rolls back below it, that can tell us that there's a potential for additional downside. The other thing that I'm looking at right now is, what is this weekly candle going to finish as? If it drops a little bit more, we'll have a classic shooting star on the weekly chart. Shooting star is a fairly strong candlestick bearish reversal signal, but it doesn't mean that it's going to immediately start dropping out of the sky. What it tells us is right here up at the top is strong resistance. The wick also indicates where the sellers have come in, and so price action can, even if this finishes down here where the top, where the wick is 2/3 of the total amount, or the body is just 1/3, that's an official shooting star type pattern. Well, prices can just go around in this resistance area for quite some time before either breaking down or breaking up. Now, if we break through the support there at 2080, then that's probably going to put us into a new retracement. And this is where we would lay on our Fibonacci's. We would lay on our Fibonacci's real quick. Let me go over here, take a look at the fibs, and go from, we can go either from this low or from this low. So let's go from this low over here to the high where we know we have strong resistance, where it has reversed down. Where might it correct to? Well, according to Charles Dow, the retracement will be somewhere between 1/3 and 2/3 on our normal retracement. And sure enough, where would that put us? That would put us down here at, about the 2021 level. And the low side of that would be back down here at the just above 1960. 1960 was a very good year, but I won't go there. Anyway, we'll see how, I'm watching to see what this candlestick, turns out to be at the, close of business today. If it in fact is a shooting star, then a confirmation would be, moving down below its low. It would stay in effect until the high was taken out, so that the high is up there just shy of 2120. Get rid of that, remove the drawing, move it on to the NASDAQ.
But just one remark to the SPX. If you just go back.
I can. So how's the weather in Switzerland, Michael?
Fantastic, really exceptional. We have a.
Is it like 75?
After the so-called century summer, we seem to have a century autumn. It's very sunny.
Oh wow!
And much warmer than it should.
So yeah, go ahead. Here's
just a point to say, or just to warn, if you look at the crash in August, it was really a 3 days crash. And in
Yes.
3, it came from 2,100 to 1,900.
Yes. And this is a weekly chart over here. Here's the daily over here. But yeah, as it started dropping, you got 1, 2 big days.
And I think that this was it the third one, or there was one Monday where basically the markets were not tradable because there was really a lack of liquidity. So in other words, with a stop loss wouldn't have helped you too much.
Yeah. And that would be, well, let's see, 821. Oops, let me go to 821. 824. Yeah, this big drop here on 824, that was a Monday. And that big almost, and I won't call it a flash crash because it's showing, I mean, you had all this selling up here, and so it was just a climax sell-off.
Yeah.
And so let's see, how much higher would the S&P weekly candle have to close to not be considered a shooting star? Anywhere above where the upper wick, David, is the upper wick, in order to be a shooting star, the upper wick, which is just the portion before the body, has to be 2/3 of the length of the total candle. So now if it still closes below the halfway mark of this candle, that would still be considered a bearish type signal, but not a definitive shooting star. And Tamsa said it is 70 degrees and sunny in Barcelona. And so how warm is it there, Michael?
Well, there is a big difference between day and night, but it's maybe from 5 to 15.
Ah, yeah, our temperatures here have dropped down into the high 40s at night, and but it's the inside the house is dropping to like 65 degrees Fahrenheit, and I'm a warm weather. I love warm weather, and so when it starts dropping below 70 degrees, I start bringing out the sweatpants. I would not do well on the East Coast, guys. And we went to London a few years ago. My son was over there my youngest son was over there doing exchange work, and we went from Hawaii to London and spent Christmas in London. One of the coldest experiences I ever had in my life. It actually snowed that year too. NDX. Moving on. So NDX. Again, I am watching to see how this candlestick works up for today. As you can see, there's a battle going on right now between buyers and sellers, and as you can see, it's right there at the breakout level of 46.94 on a daily chart. And as you can also see, we're also getting similar type, not as much, but there still is a little bit of negative divergence here going on the momentum chart, momentum oscillator, and the true strength has rolled over. And on a weekly chart, as you can see, we had 1, 2, 3, 4 strong weeks, and then the last 2 weeks have been good upside moves, but not as strong as the 4 weeks previously. And so right now we're basically in a zone of indecision, what I'll call it, because we're getting all these small bodied candles on a daily chart. And again, we'll see if we, whether or not we get a sell-off going into the close that will take prices down below the 8-day moving average for a closing price down there. And so we'll see how that goes out. One of the things, if Mike Traeger was with us today, Michael, he would be wanting me to point out to folks is one of the things that we have going on here is we have a pretty significant extension up from these moving averages. And with with anything, price action on charts tend to want to revert to the mean. And so again, we had this really huge move up, very quick, almost a vertical leap. I think Tracy on our Wednesday night training session said that this was moving up at like almost a 70-degree. And that's something that cannot be maintained. So one of two things happen. Either we move sideways to digest the gains, maybe inch up a little bit. If we start inching up a little bit, that could be actually looked at as a negative aspect, or we get a reversal for a strong pullback and then a bounce. We've got this gap here, and everything within that gap is considered a level of strong support. So anything in there would be an indication of where things could be turning around. You discuss a possible shooting star on today's weekly chart. Do you only look at shooting stars at the end of each week on the weekly, or can they tell you more during the rest of the week? Yeah, Barry, I also look at the daily charts, but the longer term charts have a more significant influence, and therefore if I see a shooting star on a weekly chart, I will give it more credence than a shooting star that would be just on a daily chart. And so let's see. You don't think, Scott asked, you don't think after so many weeks up that some digestion is needed? Yeah, Scott, digestion is definitely needed. And that might be what we're seeing right now. But one of the things, as you saw on the S&P chart, and the NASDAQ to a little bit lesser, it did these pullbacks to the 8 and then bounced higher. And it's in the process of doing that. But a lot of times after the second pullback, the third, the fourth, the fifth pullback start to get a little bit suspect, and especially if things really start to slow and stalling appears to be going on. So the Russell. In the traders report and the also after hours report, I've talked a lot about the Russell in that the Russell potentially has greater upside potential than the other charts because it wasn't participating in the move up the way the other charts were participating. It is pushing up against this level of resistance at about 1198. And as we stand right now on a daily chart, we've got several spinning top type dojis going along here, and a quasi hanging man, which is also a bearish reversal signal on a daily chart. On the weekly chart, it's looking very strong. I'd be looking to see how the Russell closes though, and if we close back below the this is the 20-week moving average. This is the 40-week moving average. If we pull back below that area, back below the 1189 level, we'll see what the close has to bring. I would say that that would give us insight that this particular resistance area is very strong, and that's where the sellers are showing up to say, hey, yeah, you've taken us up. Well, we're going to now take you back down. Then Barry asked another question, but is there any meaning for a shooting star early in the week on Tuesday or Wednesday, for example? And one thing on you can get a shooting star. Okay, well, let me clarify. A candlestick signal, Barry, on a weekly chart can only be interpreted after the close on Friday. Up until that time, it is a maybe. And the proper way to analyze any candlestick is it has to be analyzed at the close of the period, whether that's on an intraday chart or a daily chart or a weekly chart, so or a monthly chart. You got it? Okay, cool. Excellent. So Michael, you got anything here on the Russell?
No, not on the Russell.
Okay.
But I think today was a really interesting day because there was really a lot of movement going on. Dollar really strong.
Yeah.
Financials extremely strong. Everything commodity related very weak. Real estate almost broke down. If you take a look at UR, for instance, utilities went down strongly. So you could look up XLU, I think.
Yeah.
So there was really a lot of action today.
Yeah. What was the real estate one? We'll take a look at that at the end. What was the ticker on the real estate?
Just what? Give me a second.
Okay, no sweat. And so, anyway, here's where we are. One of the things I'll be looking for on the Russell here is that whenever you get a large candlestick like this, the midsections oftentimes turn out to be IWR.
Yeah, exactly.
Turn out to be areas of hidden support. And so, as we can see, that's at about the 1180 area, which is right here at the bottom of where the price action actually bounced today, which also turns out to be, guess what, the 8-day EMA. So kind of interesting that that's what's going on. And so we've had filed support there. Hold on a second.
I just typed in there the tickets.
Okay. Yeah, that doesn't come on my my other screen. So anyway, so that's just something to keep in mind. And so if the Russell is going to continue rallying, I'm not, we don't know yet if it is or it's not, because right now it's stuck between, this support and this resistance. But if it is going to continue rallying, it may do a couple of ricochets here and just move sideways in a lateral horizontal type flag. And so okay, that's it for the market. Kind of interesting. Let's go back here. So path of least resistance. For me, right now, the path of least resistance is nothing has really changed that drove the market down a few weeks ago, other than, yes, there, in Europe and in China, there's some stimulation packages that are going on. The big question with the Fed, but there seems like there's been a change in attitude towards the market, which is kind of interesting, and we'll see how that plays out moving forward. Yeah, I mean, so a couple of weeks ago, a month ago, I said I think we're about here on this particular chart, and people were asking, well, does that mean you're going to expect the market to move higher and then drop off? And I said, potentially. And so we'll see how this works out. The fact of the matter is we just want to trade the, hey, with the active, some of you are new to the active trend trading system and the active trend trading sessions, and maybe this is your first time that you've made it onto one of our Friday webinars. But the active trend trading system, what we do is it's based on the 5 pillars of trend trading, and we show our members what to trade, top quality IBE growth stocks and index ETFs. When to enter, entry points. We've done some getting back to the 8-period moving average to utilize that. And that we've gotten some really great trades over the last few weeks. And when to exit, the exit points we're using, what strategy to use, what to expect. The active trend trading system is our foundation, but then we've attached to that several individual strategies, 3 strategies that we try to keep running. As we were getting settled out in the market, this wealth building and income generation strategy has really helped us do well. Here's where we finished up the end of the month in October with about $9,400. Current win-loss ratio is about 57.6. Our target is to hit 60% winners for the year with a return of 40%. Going to have to hustle to get that 40%. But what have we done this week? We closed trades on EPAM, JUNO, and FIT. Total book profit was about 473. We took a hit on one of these, and on EPAM we lost, but on JUNO and FIT we won very nicely. We lost about 4% on EPAM, but we had average returns on these other two of about 9%. No strategy 2 trades. Wealth and income, we generated about $779 worth of cash flow for the week, and that's profits we took off the table. And thus far on our early warning alert system, we have on every alert that we've generated, we've hit every one of the market bottoms, 100%, all 7 of them this year so far. And Mike and I are working on a new video to put out on that, on how it's done for the rest of the year, or how it's done so far in the year, and also to talk a little bit about, okay, what held us back this year, with meeting our targets and also meeting the back testing aspect. And so here's one of our past setups was JUNO. JUNO, we were looking at that strategy 1, which is basically buying the stock or the ETF. Pre-earnings run. We were taking a look at this with earnings on 11/11 after market close. We had a trigger that was basically the close above the 8-day moving average on this day. On this day, we get a return to the 8-day moving average and got into this at this level here on just above the 8-day moving average on the 26th. Is that correct? That is correct. And then on the 27th, we were taken out of this trade on this day here. We held on to, a third of the position and got taken out of the rest of the position on 11/3 for a 15% gain. So total gain on this particular trade was 9.9%. Then the wealth and income generating trade, strategy 3. This is just an example of what I've been doing. One is this is a scalable trade, but on 4/29/15, I bought the January 16th, that's the one that expires in January this year, 124 calls for $7.33. Well, that call right now is maybe worth $1, if that, or about 50 cents. But during the time frame that we've been holding, I've been selling weekly calls against it. On average, I've been generating $38 worth of, income per week. I have 10. Well, I now have 10 weeks left until expiration. Been generating about, so I can gain another 10 weeks, $380 on this. 5.3% return per week on this. My target overall return is somewhere between 50 to 100%. That means paying for the position and plussing it up. So approximately $170 worth of income per month. And remember, this is a scalable trade. So, I have one contract that I'm working with this. If a person has 2, 3, 4, 5 contracts, it's all scalable. And then the current return is I've already paid for my base position, which was $7.33. My cost basis is now a negative $2.91. And I've generated a return on this of about 46.79%. So I really like this strategy, and some of the folks who've been utilizing it also really like it. Future presentations tomorrow. We at the Bay Area Moneymakers, we have our friend and my fellow shipmate Lee Tanner, who will be coming down from Petaluma, and he will be making his presentation at the Bay Area Moneymakers. Lee is kind of a legendary kind of guy. He trades primarily the IBD methods and IBD stocks, but he does really, really well. Then one of the things we're going to start doing in January is basically I'm going to do some focused training sessions for small groups with no more than 10 persons per training session, and be watching for details to come out about that. If you're interested in, it would be like a 6-week course. And if you're interested in that type of thing, just shoot me an email, and then I'll make sure that you get the details before. Yeah, David, Lee's presentation will be slightly different than last year's. So what else we got going? I want to remind everybody that, if you're on this call or if you're picking this up via our YouTube channel, that I do offer the active trend trading and the early warning alert for a deep discount. But this deep discount is not going to last forever, because we will have a rate increase going on in January. Now, if you're already a member of active trend trading or the early warning alerts, as long as you maintain your membership, the prices will never go up. But this is going to be this is going to be a membership dues increase for non-members right now that will take place in January. So if you want to act on this and get locked in at these lower prices, you can find it at activetrendtrading.com/monthly-membership-introduction. So, Michael, that's all I've got for today. You got anything else to add? I know that.
No, but I have to go very soon, maybe in 3 to 5 minutes.
Oh, you have to go in 3 to 5 minutes?
Yeah.
Okay.
Yeah.
Well, bug out when you need to. We'll see you guys next week. Have a great weekend. I'm going to be starting to look at some stocks right now.
Yeah, thanks, and bye.
Okay. Thanks, Mike.
Have a nice weekend.
Okay, you too, buddy. Thanks a lot. Stay warm.
Bye. Yeah.
And so, Barry, if you would just shoot me an email with those questions at dww@activetrendtrading.com, I will forward that information on to you. And so on strategy 1 on JUNO, you entered the position at the EMA and exited at 2 levels. What were those triggers? The triggers to exit were a 7.5% gain, and we exited 2/3 of the position at that point. And the other one was, if I can gain 15% in a few days prior to earnings, then my next trigger was 15%, and we got hit. I think about let's see, some of you guys were in on that trade. I think we got hit on that one about 10 minutes before the close last Friday. It was kind of exciting to go into the weekend with a nice little 15% gain. And then the early warning alert system, I'll be glad to explain that if you'll shoot me an email. Okay, how to get tomorrow's webinar links. Rail, what you need to do is go to the Bay Area Moneymakers or the BAM IBD site. It will tell you, basically how to do that. And so the link will be provided to everyone who, and again, the Bay Area Moneymakers is something totally separate from active trend trading. And so it has its own separate dues. And if you have taken care of your November dues, and you can do a 1 month at a time, then you can get a link. You will be forwarded a link to Lee's presentation, plus a link to the recording. I still have a little residual of my cold left. So who wants to look at some stocks? Tracy does. YY. ABGO. Yeah, let's take a look at ABGO first. That was on our buy list, I think, yesterday. And boy, I tell you, we bought that bouncing down off of the, we had I'll blow this up a little bit to show us what we were working on, Tracy, is we had a nice close above the 8 on Wednesday. And so we put in an order to buy yesterday on a bounce down around the 8. And but instead of it bounced a little bit and then kept right on running down. I was watching this trend line to make sure we did not bust through that. And but it definitely, if you were in on this trade from the beginning yesterday, it certainly enhanced our pucker factor, did it not? And so what do we have going on today? Well, it's basically it did a reversal last night, and I was kind of interested in watching the after-hour market, and I'm seeing, man, it's up $3 or $4 from what it was, at the close. What's going on there? And so we're getting a nice little rebound. Looks like it's going to be on higher volume, and we are running up into the resistance area here at about I think the resistance. The actual number is 129.84. And so if you are riding this trade up from yesterday, if we get close, and right now we've hit 129.39. If we get close to that resistance area, there would be nothing wrong with taking a 5% profit on this. David says that ABGO has an EU ruling on June 9th. What happened to the rest of it? Oh, it got bigger. Anyway, about if they will okay to buy rival Broadcom, the biggest ever merger in the sector, the result will definitely affect the stock, just FYI. And so, cool. So that's what's going on with that. Let's see what else we got going on here. David, that you wrote a lot, man, and I can't get back to. There we go. Okay. YY, another stock that we got into this week. Yesterday, in fact. Similar reason. It is not being quite as productive as the ABGO trade yet, but what we're looking at is we had multiple closes. We had close Wednesday above the 8, close yesterday above the 8. We actually got in on the bounce down here at around the 8. I think we got in at about 57.85. And now we're on this one, we're waiting for a potential pre-earnings run. We have earnings coming up on 11/11 after the market closes. And this is where I'll be targeting 7.5% and 15% prior to earnings. But I'll be looking to lock in some profit and closing the position prior to the close on 11/11. One we looked at last week, ABBV, okay. ABBV. Let's see, ABBV, this 1, 2, 3, 4, 5. Looks like it had earnings last Friday before market opened. Was the bounce up here, and then it continued and gapped up again. Volume's kind of fallen off, but it's just going sideways. Hasn't had any type of a sell-off whatsoever, and so it's got good volume, a little bit over 3.8 million on the daily chart. And so what I'd be looking for on this one, put this in, Scott, is just basically look for that typical pullback to the 8, and then if you get that pullback and a bounce, that's where I would be looking to potentially get into a trade on this. If you're already in this trade, you've got earnings behind you, and it is showing reversal signs like it is going to start moving back up. And again, if you're already in the stock, then it's looking like it's got a pretty clear range up to at least 66 or maybe even up to the 70 to 71.50 level. Okay, let's look at, I added at 49. Yeah. So you added down here. Yeah, good move. Okay, let's see. PAYC was one of the ones folks wanted to know about. Let me get rid of my drawings. Again, great breakout. When I see a breakout like this, I like to see some kind of a pullback. And the pullbacks can take on a lot of different type of pattern. Sometimes I can just go sideways in here. Sometimes you actually get a more significant pullback towards the breakout area. And so if we got that, or just even down to here, that might be a place to add back in, because you can see you got nice buying after earnings, and it's continued to move up in that direction. Okay, what else we got here? How about what the WTW? When can we get in that one without chasing? Okay, let's take a look at it. WTW. What is WTW anyway? Weight Watchers. Okay. I'll stick with my rules, Scott, and just basically say, it's got to do some kind of a pullback towards its moving average. And as you can see, somebody knew something early on that earnings were going to be really, really good, thus the gap up prior to earnings, and then it took off from there. And this was what, after the earnings report, that it's apparently done quite well. It was looking at estimate of 30, and it did 39 cents, and now is moving back up. I would take a look at it on a longer term basis. Here's the weekly chart over here. We know it's got resistance up here at the 29.50 level. And it's also got resistance at the 25.28 level. So is that where it will basically pause, before it continues to move up? Oprah bought into it, huh? Okay, good for Oprah. And okay, let's see. Oprah bought into it. And Tracy asked a question about AVGO. Would I move my hard stop up at this particular point? And Tracy, not yet. I typically am not going to move my hard stop up until I get my at least 5% in. And again, that basically is based on my own personal rules and what I worked with. And so a lot of times, if I hit 5%, I would move the stop up to break even, and that's a good rule of thumb to utilize. Okay, let's take a look at some of these. Trying to get down to, if you typed in one of those, let's see, I think it was IYR, and this is the U.S. real estate ETF. Well, on a weekly chart, it looks like it wants to fall. And I would be taking a look at the potential put options on this for a potential move down, because this is it came up and hit this resistance level and it is reversing back down. And with the anticipation, the expectation that it would at least retrace back down to the 68 level, so it's about a $5 drop. looks pretty healthy, gap down today, and it's getting beat up pretty well. One of the other ones that Michael talked about, LXU, the utility stock, same. Getting beat up really nicely today. This is really a classic kind of move. Went up, made a quasi, made a high, dropped back down, came back up, lower high, and then fell out of the sky today. Any news? Are you guys familiar with any news that was going on with regarding these the utilities and the real estate, or is it just were they scared about the potential interest rate? Okay, that makes sense. And somebody mentioned IWR. IWR is the Russell mid cap. Now that's kind of interesting because, well, you get two kind of pictures here. Shooting star on the day, on the weekly. If it closes where it is, that would be a shooting star. But a nice little pullback to the 8 on the daily. Does not do a lot of the mid cap. So it's a Russell mid cap, not the IWM. But it is kind of similar to the IWM. Okay, thanks, Judy. Okay, hack. Teresa, did I spell that right? Low volume. What does hack do? Factor shares, trust, ISE, cyber security. Yeah, I don't know if this would be an ETF I would be interested in. Just for one, the very low volume on it. It's less than 500,000 shares, about 600,000 shares, or average 438,000 shares. I think there's more, better ETFs to put your money into. LGIF. Okay, had earnings, fell after earnings, stabilized, and now is rebounding. Are we rebounding in volume? Right now, no, but we definitely have a trend line going there. And so, well worth watching because it did maintain and hold the 50. Again, this is another one of those, average volume over 500,000 shares, so I wouldn't have any issue in trading it. Okay, Panera Bread, or not Panera Bread, Palo Alto Networks. There we go. PANW. Right now it's in a downtrend. As you can see here, all the moving averages are facing downward. It does have earnings. It may go into a slight earnings run. 11:23 after market closes. And so, and yeah, let me get rid of that, remove drawing. So anyway, look at this. It's hanging out now down below the 200-day moving average, and everything looks like it wants to fall out of the sky. Big gap down, and it's not regaining the 200-day moving average yet. Take a look at Under Armour, and then I'm going to throw out a couple for everybody to take a look at. Okay, Under Armour got past earnings, gap down, must have disappointed. I don't know if it was forward guidance or only beating by a penny. But now it looks like it's trying to do something to real build up. But take a look at what's going on. Momentum is staying low, and the volume is also staying very low. And oftentimes you'll see these bounce ups where the TSI bounces back up, but it's down below its primary moving averages. And so if it hits this zero line and rolls back over, that's probably telling us it's going to take off and head lower. Under Armour. And so a couple that just caught my eye that have been doing something constructive is VDSI. VDSI had been a big winner last year, and it has continued to be really, really constructive as it's moved back up slightly above average volume, and it's already passed earnings, had a good earnings report, and it just broke up. It hasn't quite broke above this high here at 2025, but if we get a close above that, that will make that level into a new level of support. So it might be worth keeping your eye on. We have had a close above the 8-week moving average now, and oftentimes that can be a trigger because that can be the early signs of something turning back into, getting back on line with the uptrend. And clearly, it's got this. This is low right here. Where is it? Right there at 2059. And where is it hanging up at? Well, 2059. Kind of amazing. So if we break it back above that level, get that close above it, then we could be looking for a really quick, nice little move up in this case. So that's VDSI. The other one was had good earnings report, was Shack. At least I think it did. Yeah, but it had good earnings reports. Almost double what it was expected. Getting a little bit of a sell-off today, but let's just see how this works out. Got to close back above the 8, and let's see if it maintains that. But it gives us some really good benchmarks on where we could potentially plan trades around the stock with. One that's been kind of a little bit surprising, HWK. Has gotten past earnings, moving back up into this level, waiting for a pullback. I mean, it's just consistently going to go up on lower volume. One of the ones that we made some good money on a couple of weeks ago, or actually closed out one of the positions first part of this week, was JUNO. JUNO is, well, nope, I would not jump on board JUNO because it is continuing to sell off into earnings. And oftentimes when that happens, sometimes somebody knows something. But thankfully, we already took a good 10% out of that. Okay, GILD. Hey, I like GILD. Get some good volume coming back in and get the close back above the 8-day moving average. That might open a door for us to proceed on up. I'm watching here, the momentum's kind of starting to, wane a little bit on a weekly chart. That's a concern, and really struggling like in a buck above the 0 line on the TSI. And right now, volume's looking kind of weak. So, okay. Folks, I'm going to call it a day unless somebody's got one more stock. I'll take a look at one more stock. If you are a premium member and you get the market updates, I hope that, one, I think we've been doing a much better job of being timely in getting our alerts out and giving you an opportunity to participate in the trades. And so the emails I getting back are saying that, hey, it's working well for you. And so I'm very thankful for that. We got 2 more stocks we'll take a look at. ULTA, 3 more stocks. No, not ULTA. AUL. Okay. At resistance when it's, but it's still holding this breakout that was above the 171 level, but just barely. So you could basically take a look at this, draw a little flag across here. If it breaks back above that, or if you get a close above the 8, you'd like to see it on increasing volume. I don't make volume a criteria for getting into a trade, but I like to see volume kick in after I am in the trade, because sometimes, occasionally, volume will trail the actual price move. EGRX, which is Eagle Pharmaceutical. Somebody asked me about this one the other day. I think it was Gary. It still has earnings coming up on the 11th before market opens. If you are already in this trade, let's say you got in on the move above the 8-day here. Let's say you got in here. If you haven't been able to take your, well, you would have been up 13% or 10%. So hopefully you would have taken some profits on this, Gary. It looks like it's setting up well for a potential, if earnings go well, it is basically showing the early signs of moving back into an uptrend, which is really good. But I wouldn't necessarily write it into, well, I mean, pre-earnings run, sure, but it'd have to do a pullback back to the 8-day on that. And then FB file, Facebook. It's approaching where you could potentially look at a potential entry point. Scott, I'm looking where it broke out above this level. If this level at the 105 at 105 holds, and so that's kind of my benchmark along with the 8-day moving average. That's where I would be planning a potential trade around with the anticipation that Facebook is going to break further up. Clearly it broke through that little cup right here, a cup and handle, at the 100 level, and it's continued. It's gone up another 10% since it broke through that level. So, hey everybody, if remember to send me an email if you're wondering about the Lee Tanner presentation tomorrow. I want to thank everybody for joining. Please let your friends and even your enemies know that we do a good show on Fridays. Now, we like to invite anybody who you would recommend it, or we would count it a privilege to be able to share with others. So have a wonderful weekend. God bless everybody.